All right, in the daily notebook, here's what I was looking for before the market opened today. So what was my bias and why? Today I was bullish because of the work done in the overnight session at the daily order block. I think it should leave the inside day range higher, which could lead for a push into even Monday high, but probably not because there's no drivers, possibly in the PM session. So what setup was I looking for? I was looking for a bullish premium gap opening at the open, anticipating the market to break out of the inside day range higher. But with where it's at right now, I don't know if I'll get a drop down if it shows strength above Tuesday high. I know there's room between that and Monday high to get onside. And an alternative plan, because I knew that the market was likely to just go right at the open, I said if the market opens and continues to run, then it shows me it's failing to break out from Tuesday's high, I'd be open to selling that for a bearish premium gap opening. So my model my model does revolve around the gap opening at 9:30. So based on the economic calendar, based on the weekly chart, based on the daily time frame, based on what we've done in the overnight session and the pre-market session, I'm thinking about how is the market going to treat that gap opening. Is it going to move away from it and then fill it? Or is it going to trade down into it, respect it, and then trade higher? I'm just thinking about how the market is going to respect that gap opening. So if we go to my notebook, we go to my playbooks, it's basically the same setup, just happening in different ways, like up or down. That's it. So you have a bullish discount gap opening, a bearish premium gap opening, a bullish premium gap opening, a bearish discount gap opening. It's essentially the same thing. Let's go to the market real quick. Let's say we have a premium gap opening like we do today, right? Here's where we closed yesterday, regular trading hours at 4:14. Here's where we opened today at 9:30. We opened higher. It's a premium gap opening. Now, based on the economic calendar, the weekly chart, the daily chart, what we've done in the overnight session, the pre-market session, I'm just anticipating the market to drop down, respect that gap, and then trade higher. That's a bullish premium gap opening. Or it can open, trade away from that gap, deliver a buy-side objective like it did today, and then reverse and work towards filling that gap. This right here is my bearish premium gap opening setup, where the market opens at the high day, pushes up into a buy-side objective, then reverses and attempts to fill that gap. And there's smooth and obvious liquidity from the pre-market session and in the overnight session. Now for a discount gap opening, it would just be the same thing, but the opposite. So I'm literally just looking for the same thing over and over and over again. So what I was looking for going into today, if we go to the daily chart, what we got is this down candle right here. This down candle gets overlapped. The opening price of this down candle is violated with this large up candle. The market is consolidated Monday, Tuesday. We've had an inside day. So typically when the market has inside days, the following day after that is usually a large range day that breaks out to either above or below that inside day range. Since the market is bullish, since we're at all-time highs, and given the information done in the overnight session at this down candle, I'm looking for the market to take these two highs right here. I'm not looking for it to drop lower. So daily analysis, let's go to the 4 hour. On the 4 hour, I can see that this candle is bullish. Why? Because it drops down, takes that candle's low, but it closed near its high and also overlapped these two small range down candles. So this is not looking very heavy to me. This is looking bullish to me. Also noting where that candle opened, where it traded down to, but where it closed, respecting the daily order block, that's bullish. So the following candle, I want to see it do something like this, right? Go to the hourly, and we can see that the hourly is telling the same story. So now the 4 hour is telling us that it's respecting the daily order block. The 1 hour is telling us it's respecting the daily order block. Because we have this candle that drops down, takes that candle's low, closed near its high, and then the market began to leave this little consolidation range that we see right here, right? So before I establish my bias, I like to see the close of the 8 o'clock candle on the hourly time frame to give me a good idea of how the 9 o'clock candle is going to paint. Now we can see that the 8 o'clock candle closed indecisive. That tells you the market's comfortable where it's at. It's not really going to reverse, especially when it's reaching for something like these daily highs. And I note that in my plan. Go back to the daily notebook. Let's go to the hourly, right? This close doesn't mean reversal. Boom. I'm just being very blunt, straightforward. This is what I'm looking for today. Note the price action is coiling up. I think it's likely to leave the high of the range. These lows are equal, but there's SMT, so it may have done enough. It's another piece of information right there, right? So I'm just noticing how multiple time frames are in agreement, indicating that the market's respecting that daily order block, that daily down candle. And so I'm looking for higher prices. Now with how the market's set up before the open, we have that close on the 8 o'clock hourly candle that tells us the market's comfortable where it's at, right? Right here, boom. That close right there tells me it's probably not going to reverse. Same thing on the 15 minute. This close right here, how the body closed inside the range of all these candles and has an upper wick and a lower wick, but the body is basically in the middle of that candle. That tells me the market is still comfortable where it's at. I also like how it took these lows right here, cleaned out all these equal lows in here, And then the following candle does this, overlaps that candle, closes over its high. That's bullish. So now I can expect this down candle to act as support. Not sure if I mentioned that going into 9:30, right? If this market runs right from 9:30 following a lack of good overnight and pre-market volatility, then I'm not interested in buying it. I could set up a negative PGO, a bearish premium gap opening, if the market fails to break out from the range. Unlikely if it shows strength over Tuesday high. It'd be an inside day breaking out from the range. So I was looking for a drop into this gap right here. Where is it? Right here, right? But I know that's not likely because of how things are setting up right here. So I'm probably thinking it's gonna run at the open. And if it does that and shows strength over Tuesday daily high, I don't necessarily want to be a buyer at the high of day, because from my back testing, I've learned being a buyer at the high of day is never really a good idea, especially if the market opens at the high of day. But if there's range between where the market is opening and what you know it's trading to, then that's a good trading idea, which is why I noted earlier in my plan, I know there's range between where it's at right now and Monday daily high. So I know I could at least reach for this if it shows strength above Tuesday daily high. That's something to look for me to potentially get on side with, but it just left. Basically, long story short, I know I'm covering a lot of detail, but it just left at the open. Didn't give me any opportunity to get on side with it. So when the market does this, I'm thinking we're probably gonna have an all-day trend day, because we're having an outside day after an inside day, leaving the range higher when the daily time frame is bullish and the market's at all-time highs. I'm thinking today's probably gonna be an all-day trend day. We're not gonna see something like this. So basically, I check out right here. And one thing that I learned about myself is how I know that I'm checked out from the market is I'll literally just start looking at different assets. Like for example, I'll be on here and I'll type in ETH, not stocks, there we go, crypto. Type in ETH and I look at the price of Ethereum, or I'd go to Bitcoin, I look at the price of Bitcoin, or I'd look at this other stock that some multimillionaire told me about. It's called Vaxart. It just got delisted from the NASDAQ. And that's how I know I'm checked out. So I was basically doing that right around here, around 9:45, and I missed this, but this still shows my setup, okay? So that's basically a breakdown from today's session in simple terms. There's not really much to cover. Let's go back to the daily notebook and check out the lessons that I learned today, right? So what did I learn? Inside day behavior. Over the past 2 days, the market is coiling up on the daily time frame. You can see it in the lower time frame, how the range of this candle is small. The range of this candle is smaller. It's like the market is compressing like a coil before it's released, right? Learned that from ICT 2024 mentorship, where it basically just explains this simple concept, but it's not something that he invented. This has been around for a long time. It's just simple logic. Price is coiling up, and then boom, we have an explosive move out of the range, takes one side or the other. In this case, takes the high of the range. Why? Because we're bullish on the daily. And then I learned how I know when I'm checked out. Like I explained to you guys, I literally just start looking at other asset classes and things that are just completely irrelevant to me actually day trading the NASDAQ. And when the market is going to leave at 9:30. When is the market going to leave at 9:30? When pre-market looks something like this, right? This candle tells you the market's comfortable where it's at. It gets overlapped pre-market on the 9 o'clock 15-minute candle. So this should act as a down candle, act as support, right? This candle, boom, closed over Tuesday daily high. Now it's confirmed that we're leaving the inside day higher. And boom, we just get this explosive reaction at 9:30. So here's my annotations post-market, because you should always go back at the end of the day and study, what you missed, how price delivered, why it delivered that way, right? So this is my bearish premium gap opening setup that I checked out of way too early, so I didn't get to see it play out. My entry model is here. I can explain my entry model in this video, but I think for the rest of the video, I'm just going to explain what I'm working on outside of actually live trading, and it's going to be backtesting. Backtesting right now with the intention of getting comfortable with my model and understanding all the elements of my model. Not only that, but all the elements of what make up trading. My trading as a business, because there's so many different elements that go into this. And it takes a really long time to understand all the elements that go into your trading system, which is what I'm working right now. I'm learning all this through backtesting. Like I'm literally doing a full backtesting session, and then I'm going back at the end of the month and treating it as a real monthly review, as if I actually traded the live market. And this is allowing me to put the pieces together and connect the dots about what it is that I do in my trading system really, really fast. So I'm doing this work, and this work takes a lot of time. It's slow, but slow is smooth and smooth is fast. If you try to rush the process, it doesn't work like that. Trust me. I've been there many fucking times. And there's been so many external factors outside of the market itself that have influenced me to skip a lot of things that I knew I should have been doing early on in my journey. For example, I was attempting eval after eval after eval because of external events that happen that literally have nothing to do with the market itself. For example, my mom telling me that I'm going to fail in trading, it's not a real profession, and I'm going to lose my ass. After that moment, after that event, I felt influenced to go and attempt an eval and prove her wrong and show her that I can make money trading, right? So what do? I skip steps because of something going on externally outside of the charts. That's going to influence you to skip all the steps. It's going to influence you to rush the process because whatever's going on outside of the charts is going to make you want to make money right now. But that's not how this game works. You can't rush it. There's a lot of things that have to be done first, a lot of things that are very slow, that take a lot of time to understand and develop. But if you do those things the right way, you actually get the outcome that you're looking for. It comes a lot faster. So when I first set out to do this, basically everything that I'm doing right now is modeled off of this that I've learned from Umar Ashraf in a video that he's posted on Chart Fanatics, the YouTube channel, right? Everything that I'm doing comes from that video. I know what stage I'm at in my journey. I'm in stage 2. I'm still a developing trader, right? So these are all the things that I have to do. It's a lot. So what I did was I went through that video and I highlighted everything that I lack about my trading system and my trading process. It's all highlighted in red. I lacked all of these things. Now I haven't updated this since I made it. I could probably go back in here and check off a lot of these things. But these are all things that I have to have in place to operate a proper trading business. This is how you get to the next level. You're going to rush the process and skip doing these things because of external factors outside of the market that make you want to make money right now. But it's not how it works. It's not how it works. And the only reason that I know this is because I studied my journal from the last 8 months. And I went back and I realized at all the points in time where I was on the right track, I was doing things the right way, I was going slow, I was following a process, and then I skipped everything. I threw it all away because of something happening outside of the market. It's how this shit works. And that's the hard part about this journey. The hardest part about this journey is the time element and how long it's going to take. That's it. Because you're probably going to go 2 or 3 years without ever making money. But the whole time, you want to make money. And that's still something that I deal with. It's that timeline aspect that's going to make you rush the process. But anyways, I'm going off on a tangent there. I'm just putting together the pieces that make up my trading system. So frequency. I want to know exactly how many times per month I can reasonably expect my model to be there. So I'm tracking this statistic. I want to know how many good trading days can I expect to be there out of a month. For example, in July 2022, less than 40% of those trading days, 7 out of 18, were good trading days. At the same time, were also bad trading days. These numbers were the same. 7 out of 18 of those days were really bad days. 7 out of 18 of those days were really good days. Only 40% of the month was actually a good trading day. This makes you think about how you have to perform over the course of a month. Now, playbooks. I want to know the ideal criteria for each playbook. I want to know how they set up. I want to know things about them. My market approach. How do I approach the market? My entry mechanism. What do I actually use to get into a trade? Day selection. What days do I want to be trading? What days do I not want to be trading? And there's so many other different things that come into this. Like, for example, rules. Entry criteria, I've got that. Market approach, I've got that. Day selection, I've got that. So I'm just going through here and checking off the boxes. That's it. Setup selection. I have to understand setup selection. So many different elements that come together that make up the trading system that is you. Master that shit first. Focus on that. Don't be worried about the money. I think that's going to be it for this one. So I'll talk to you next time. See you.